Well, good morning. Welcome. You're watching Market Cafe on ET Now. I'm Harsh Saita. With me is Snehi Shah. Good morning, Snehi.
Good morning, Harsh.
We're going to take you through, of course, all that's happening in global markets as well as macros. Take you through all the policy announcements that have come through since yesterday, whatever you've missed out on, and catch up on all the stock in news quickly through this show, of course. So let's start off with how global markets are trending. Snehi, what are the initial cues before start of trade today?
Absolutely, Harsh. Let me take our viewers through what the US markets did in trade yesterday then. And US futures were flat in overnight trading Thursday after markets rallied on the back of the latest IPO debut. ARM soared 25% on its debut, and we'll discuss about this IPO later in the show as well. Stocks are coming off a winning session as Wall Street applauded a possible end to an extended tech IPO drought and assessed a fresh batch of economic data. Now, the Dow jumped almost 1%, rising for the first time in 3 trading sessions and notching its best daily performance in over a month. The S&P 500 added almost 0.8%, while the Nasdaq Composite climbed 0.8% as well. All major S&P 500 sectors finished positive, and that was led by the upside in real estate. Healthcare was the worst performer, eking out just a 0.2% gain, and stocks are headed for a winning week with the Dow on pace for nearly 1% gain and its second positive week in the last 3 weeks. The S&P and Nasdaq have jumped about 1.1 and 1.2% respectively, putting them on track for their third positive week in the previous 4 weeks. Now, the headline producer index grew 0.7% in August, coming in above economists' expectations of that 0.4% mark per Dow Jones. However, the core PPI climbed by 0.2%, which was largely in line with estimates. Investors are looking ahead to another packed day for economic data. This includes a preliminary September consumer sentiment reading as well as import and export prices for August. Industrial and manufacturing production data for August are also due, and remember, all eyes will also be on the Fed meet that is due on 19 September, which is next week. So, very positive handover coming in from the US, Harsh. But with that, this is the equities front. Why don't you take us through what commodities did?
Well, absolutely. So let's talk about oil straight off the bat. You're looking at oil, which has been whipsawing over the last couple of days. We're seeing crude prices, which were sub 90, climb over 90 a couple of days back, again fall below the $90 a barrel mark. That was largely, and I'll take a bit of a rewind here, that was largely because of the OPEC Plus estimates, where OPEC Plus believed that crude demand will remain robust, growth continue to remain robust globally as well as in the US. So they believed that crude demand would remain robust through calendar year 2023 as well as through calendar year 2024. What also now we've been told is OPEC Plus will not be increasing its production at all in response to that elevated demand that is going to come through. And what that means is that despite crude really falling yesterday on the back of US building its reserves, crude has again notched another high since November of 2022. In fact, we're seeing WTI just below that $91 a barrel mark, and we're seeing Brent above $94 a barrel. In fact, in the US, for the first time since November of 2022, crude has actually come above the $90 a barrel mark. So definitely some bit of concern with regard to crude, especially when it comes to inflation, right, Snehi? Because we have the Federal Reserve meeting up next week, and this will be one of the key things that they will consider when looking at a rate hike or not, is how inflation will trend as a result of crude.
Well, absolutely, Harsha. We will keep an eye out on that Fed meeting, pardon me, next week, as well as how that impacts the global markets as well as Qs. We've also had the ECB that has hiked its rates to historic levels, and we'll touch upon that in just a bit. But with that, let's also look at other Qs that you need to be keeping on your radar for today. Now, when it comes to data, you've got the US industrial production as well as China industrial production data coming out today, so keep an eye out for that. On the IPO action front, now lots of action when it comes to the primary markets. September 15 to 20th, Yatra online IPO will open for subscription. And today is also the last day to subscribe for the RR Kabul IPO. So keep an eye out for both these IPOs as well in the primary markets. Corporate action, well, we've got a slew of things happening. Today is the BSE Sensex and the BSE BankX expiry. HDFC Bank and the FTSE and Sensex adjustment will happen today. So HDFC Bank will be in focus. Pyramid Technoplast Q1 earnings will be released today. Happiest Minds, the lock-in period ends for 20% shares, and the board of Texmaco Rail will consider fundraising today. Lots happening on that front as well. When it comes to the other events, Apple will start its iPhone 15 pre-booking in India. So all you Apple enthusiasts and iPhone enthusiasts, watch out for that one as well. 15th of September, which is today, is the end of the Mumbai double-decker buses. Well, that's a little heartbreaking, Harsh, when it comes to that. But and lastly, you've got Citroën C3 Air Cross bookings to begin today. So keep an eye out for that as well.
Well, yes, absolutely. Lots and lots of memories with regard to those double-deckers, Snehi. But let's quickly move on to the ECB. They've continued their 10th consecutive rate hike. The European Central Bank raises again by around 25 basis points, taking their central bank rate to 4%. The base rates now are at 3.5, above 3.5 in fact since June last year, taking it to record highs. This after inflationary pressure increased in the region in the past months, which is seen to be averaging 5.6% in the current calendar year. ECB has cut growth projections as well for all the years till 2025. Here's what we got from ECB's president, Christine Lagarde. Listen in.
Inflation continues to decline, but is still expected to remain too high for too long. We are determined to ensure that inflation returns to our 2% medium-term target in a timely manner. In order to reinforce progress towards our target, the Governing Council today decided to raise the three key ECB interest rates by 25 basis points. The rate increase today reflects our assessment of the inflation outlook in light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission. The September ECB staff macroeconomic projections for the euro area see average inflation at 5.6% in 23, 3.2% in 24, and 2.1% in 2025.
Well, that's the word coming in from ECB President Christine Lagarde, but we also caught up with Anurag Singh, the managing partner at Ansett Capital, to get some perspective on the global market impact over the ECB rate hike. Listen in to what he had to say.
The rate revisions are normal because, look, think of it like this. What would happen if RBI comes out and lowers the economy rate growth of economy projections drastically downwards or upwards, right? It creates an alarm in the market. So that's understandable that ECB is just following the trends and kind of not being alarmist about it. But I think, last week, lowering the growth targets to 0.8% for 2023 and 1.3%, and just a 20 to 25 basis point drop. I think that's significant.
Well, switching back over to the US and IPOs coming through. Finally, British chip design firm ARM debuts on the bourses on Thursday. Stock opened at over $56, notched 25% gains to close at $63.50, giving the company a valuation of $65 billion in its return to public markets following a 7-year absence.
And cloud-based software firm Salesforce will be hiring thousands of people across various verticals after slashing 10% jobs in January this year, according to a Bloomberg report. Remember, the company had slashed jobs after rapid pandemic hiring left it with a bloated workforce amid an economic slowdown.
Right, shifting focus, Israel Prime Minister Benjamin Netanyahu, who is scheduled to meet Tesla and ex-chief Elon Musk next week during a trip to the US. The meet will include discussions on AI. Also remember, Musk currently is facing accusations of allowing anti-Semitism on the X platform, which is of course Twitter.
And shifting gears then, shipping giant Maersk presented its first container vessel moved with green methanol. Do remember, shipping accounts for around 3% of global carbon emissions, an amount comparable to major polluting countries, a landmark moment in the history of the most pollution-inducing industries.
Right, and undeterred by the monetary policy tightening and weakness in exports, India will continue to grow at the rate of 6.3% this fiscal. This is coming from Fitch Ratings. The agency decided to retain its GDP growth forecast from June this year. It also maintains growth forecast for FY25 at 6.5%, but they also warned of inflationary pressures in the remaining part of the year, mainly due to El Nino, of course. This might impact the Q2 GDP, likely to moderate in September end. Apart from the weather, another factor that may negatively impact Indian economy are weakening exports as well. Consumers becoming pessimistic when it comes to income may also dampen economic growth, as India might not be as immune to global economic slowdown going further.
Well, with that, let's slip into a very short break. On the other side, we'll take note of how the Asian markets have opened up this morning.
Welcome back. If you've just joined us, we're looking at positive cues across the board, across global indices, as well as across Asia. Absolutely flat on the GIFT Nifty right on your screens. But we'll quickly take it stock specific. As promised, Tata Motors has unveiled the Nexon EV facelift, priced from 14.74 lakh rupees to 20 lakh rupees, inspired by the Tata Curve concept. It shares design elements with the ICE-powered Nexon facelift launched at 8.1 lakhs. ET Now's Sumit Chaturvedi caught up with Sailesh Chandra, who is the managing director for the PV and EV business of Tata Motors. Listen in to that conversation.
Nexon, when we had launched Nexon EV in 2020, the perception of electric vehicles were very poor. It was seen as, cheap, low cost, the low range, city, small, tiny car, but very high on cost. So it was not practical. And it was Nexon EV which really changed the perception of EVs and defined what should be the standard of EV cars in India. And that is what took the volumes of EVs as an industry, I'm saying, from a pre-Nexon EV era of 150 per month to today about 8,500 units per month. So therefore, Nexon EV has a stature, it has a responsibility and a role to play as far as electrification in the country is concerned. So it should always define and be the benchmark of what an EV should be in India.
And about the Nexon, the real Nexon which you launched, it's also been given a full, we can say that facelift, and it's a new avatar now. What changes in the Nexon apart from EV, the new other Nexon, what changes there also?
See, that Nexon was, ICE version was the first Nexon in its true life, launched in 2017. And it was known for few things, which has made it successful and number one SUV in the country. What are those? One, that the design was very, very unique. And it defined the safety standard of the country. It became the benchmark of safety. And also, it always gave performance and technology which was a notch higher. So when we conceived the new Nexon in its ICE avatar, new avatar, we said that this should go to the next level. It should go way ahead of what one expects in this segment. So there also, you are going to see that the design has become more futuristic, more techy. The tech has gone to a different level of what you expect in a gadget actually. And then safety, a lot of feature enhancement have been done to now set the new benchmark for safety. And you get with new options like DCT, which makes it more smoother and convenient to drive and make the experience even more smoother. So those are the kind of changes that the new Nexon in its ICE version has got.
Well, that's the word coming in from the management at Tata Motors. But moving on, India is one of the fastest growing beauty markets in the world, and Nykaa is one of the major companies in that market. Now, ET Now had an exclusive conversation with the CEO of Nykaa's beauty e-commerce department, Anchit Nair. Let's listen in.
Growth of the beauty market in India is much faster than that of other markets. But yes, the per capita consumption is still relatively low compared to other markets. But that's obviously because India is a very large country with over 1.3 billion people. So what we are expecting is a growth in the per capita consumption, and India should be the fastest growing beauty market for many years to come.
There is beauty and personal care, there's cosmetics, but in terms of apparel also you have presence online. Is that a possibility in the future?
So on the fashion side, Nykaa Fashion, it has a couple of stores already, which they're piloting. And we have some of our own brands, like an athleisure brand called Naked, NYKD. And they've also launched in physical retail. So I think it depends case by case. And, we'll be understanding the market better, understanding the consumer. If there's a need for it, it's a possibility. But as of today, publicly, we're just speaking mostly about our beauty store expansion at this point. Right now, we are very focused on growing our e-commerce business for Nykaa Fashion. It's hardly a 3-year-old business, and it is already one of the largest fashion portals online already. The beauty business is 10 years old, so it's a little bit more mature. So the beauty business is in a good place to continue to expand offline. Fashion is focused on improving and excelling online. And yeah, from time to time we will think about if it makes sense to expand offline. That is a possibility, yes.
This fashion store coming, yes, fashion store coming to metro cities is, when will that happen? I mean, are you targeting this pilot across certain cities right now?
No, as I said, we already have a couple of fashion stores that are up and running in Delhi.
But the next...
and in Bangalore as well. No, as of today, we're not speaking publicly about our expansion on the retail side for fashion. As I said, that's something we're looking at internally. And of course, as in when it's ready to go, we'll let you know.
Right, let's quickly move on from there. In a bid to enhance UPI payment convenience, the Reserve Bank of India governor has unveiled a new edition known as UPI Lite X. With this feature, users can conduct offline money transactions seamlessly. My colleague Astha Kopra joins with more details on this one.
What if you are in an area where there is no internet connection and you have to make money transactions? Here's where RBI comes up with a solution with the launch of UPI Lite X, where you can make your money transactions offline. Now, what is UPI Lite X? In this, the sender and the receiver can make money transaction offline wherever they want, whether that area has the connectivity, internet connectivity or not. Now, the question arises, how can the consumer access it? To access UPI Lite X, the sender and the receiver has to be in a close range because it works on NFC, that is the near field communication. Here, the money transfer will always happen between the wallets and not in their bank accounts. The UPI Lite X will be accessible to anyone with a compatible device that supports NFC. While the UPI Lite payments are faster than any other method, it's possible to have smaller denomination transaction in a very hassle-free method. The consumer can make the transaction easier and in a very quicker way with UPI Lite X.
Well, ET now caught up with Food Secretary Sanjeev Chopra on the rumours of sugar shortfall in the market. He also assures that there will be no significant commodities and price hikes during the festive season. Listen in to that excerpt.
Availability of sugar in the country is about 85 lakh tons as of now, which is sufficient for 3.5 months of requirement, of the consumption requirement of the country. We are not foreseeing any kind of upswing in the prices in the upcoming festive season. And there is some kind of a rumor being created about the shortages in the country. So I think, as I've clarified, the stocks that we have now are sufficient for 3.5 months.
The big decision that you have taken regarding that you have brought down the stock limit of the wheat. What is the exact number and why this decision has been taken, sir?
So stock limits of wheat has been brought down from 3,000 tons to 2,000 tons for the wholesalers and traders, and also for the big chain retailers. So this is on account of the fact that the 3,000 ton which we had given in June was for the next 9 months requirement. The next harvest will come in April. So for the 9 months, 3,000 tons had been given to these entities. Now that 3 months have elapsed and 6 months are left, we've reduced it by 1/3. So from 3,000, it's been brought down to 2,000.
One final comment, there has been constant, that you term as rumor, that the harvest is going to be severely impacted because of a deficient monsoon. what sort of feedback that you're getting, what sort of analysis you have, and what is the larger message that you want to share?
So this is for sugar or wheat?
For both, sir. Because regarding sugar, it has been said that the crop might take a hit.
So sugar, as I said, that the rains were deficient in August. However, the heartening feature is that since beginning of this month, the rains have been good, as a result of which the crops have revived, particularly in Maharashtra and Karnataka.
The stock availability of the edible oil, comfortable position?
Again, stocks are much more than what we had last year compared to last year when we had about 23 lakh tons of stock at this time. It's about 37.3 lakh tons this year.
Right, with that, let's slip into a very short break. We'll bring you more on the other side, go more stock specific, talk about all the brokerage notes that have come through as well. Stay tuned.
Hi there, welcome back and thanks so much for staying tuned to Market Cafe. This is ET Now. Now the Nifty had closed at record high levels yet again yesterday, and to understand what the FNO setup looks like going into the week ahead and the next week as well, Ansh is joining us in the studio to take us through just that. Ansh, take it away.
So Nifty not only made fresh record high, but it also closed at record high level. However, the index has been hesitating to form a strong bullish candle from last 3 sessions. On the other hand, mid cap and small cap have shown good strength from 20 DMA recently. Now let's shift our focus to what happened in FNO. Long buildup was seen in Nifty futures with OI increasing by 7%, keeping the sentiment positive. Whereas on the option front, we saw good call buying at 20,200 strike, indicating option traders expecting Nifty to climb over this level, whereas put writing was seen at 20,100 strike, which was around the previous close only, indicating that index should stay above this level. Now let's shift our focus to what FIIs did. In index futures, they added 4,300 long contract, but they also added 6,100 put contract. So if we see net to net, it was minus 1,700 contract, which is not a big number because in previous session we saw a long put of a long positive net of 14,000 contract. So this is not that strong bearish sentiment. On the option front, we are seeing net call of minus 37,000 contract, which is a bearish sign. Whereas on the put side, we are seeing net addition of 25,000 contract, which is also a bearish sign. So in short, data is suggesting a bit of cautious sign. However, Nifty seems to have good support at 20,000 mark and at the ultimate level of 19,850. Mid-cap, small-cap seems to be having good cushion downside at 20 DMA. So despite of the cautious signals, which is not strongly bearish, we can have some positive sentiment in the market till these levels are protected on downside on closing basis.
Right, Ansh, thanks for that roundup. Of course, also you have a list of stocks that we need to watch out for today as well. Ansh, talk to us about all the stocks and news.
Sure. So Tata Power will be the first stock in focus for today's trading session, as company has signed a power delivery agreement with Expro India to establish 3.1 megawatt of solar plant. Apart from this, Patel Engineering will also be in focus, as company in a joint venture has been declared as the lowest bidder for an irrigation project from Maharashtra Krishna Valley Development Corporation. Company share in this contract is around 9,900 crore and the duration for which is 30 months. Strides Pharma will also be in focus, as company has received tentative US FDA approval for tablets which is used for HIV treatment. The market opportunity for this product in US is estimated to be around $1,345 million. Sona BLW will also be in focus, as company's board approved $1.6 million investment in one of its subsidiary, which is setting up a plant in Mexico. Godrej Property is also in focus, as board has approved issuance of debentures worth 1,000 crore along with more debentures worth 500 crore with an option to retain oversubscription up to 400 crore. Lastly, JMM Pfaudler will be in focus, as company has entered into an agreement to acquire Mix Pro for a total consideration of $7 million. So keep an eye on the stocks.
Well, thanks so much, Ansh, for taking us through that. I'm sure our viewers will be tracking those stocks closely in today's trading session. But moving on, FTSE, Sensex and Wisdom Tree India earnings fund will see some major rebalancing today, where the adjustments are expected to happen in the last half an hour of the reading session. Somit is here with all the major inflows and outflows and the details of all of that. Somit, take it away.
Well, 3 major rebalancing are expected to happen that is FTSE, Sensex and Wisdom. Now for FTSE review, if you see the inflows that would happen in the last half an hour, that is expected to come in at around $570 million in India. For Wisdom 3 India earnings fund, they are just adding HDFC Bank to the index, and because of which there could be an inflow of around 90 million fund. And this adjustment, as I mentioned, is expected to happen in the last 30 minutes of trade on September 15th. So major stocks that would remain in focus, firstly is HDFC Bank, which is expected to see a cumulative inflow of close to $562 million, and that is nearly 1.5 times its 20-day average trading volume. For AI Engineering, the inflows are expected to be around $31 million, which is nearly 7.4 times its average volumes. For Syngene, it is expected to be 20 million, which is nearly 2.3 times its 20-day average volume. Other stocks that would remain in focus are Capri Global, Ion Exchange, Usha Martin, Safari Industries, Tamil Nadu Mercantile Bank. These are expected to see an inflow in the range of around 8 to 12 million which is more than 2 times their 20-day average volume. Now, few stocks that would remain in focus on the back of outflows. Firstly, it's Bajaj Finserv, that is expected to see an outflow of around $31 million, which is nearly 1.3 times its 20-day average volume. Apart from that, there is Hudson Agro, which could see an outflow of close to $12 million, which is nearly 13 times its 20-day average volume. And lastly, Brookfield REIT would also remain in focus because an outflow of around $7.1 million is expected to see because of FTSE adjustment, which is nearly 4 times its 20-day average volume. So keep an eye out for these stocks in trade.
Right, thanks for that, Somit. We'll quickly move on. Diagnostic stocks will be in focus as well. Nuvama reports that Tata 1mg as well as Apollo 24/7 have raised test prices in the month of August. My colleague Vamakshi joins in. She's got all the details on this one. Vamakshi, take it away.
A whole host of diagnostic as well as pharmacy stocks will be in focus today, and that is because Tata 1mg and Apollo 24/7 have raised their test prices by 12 to 13% and nearly 60% respectively in the month of August. Now, price hikes were mainly in the semi and high specialized tests. From May to June, in fact, online players had taken their first aggressive price hike, particularly in pharmacy, and in fact, online players are also gradually raising prices for select preventive packages. Now, when we talk about Tata 1mg, the Platinum Full Body Checkup and Pharmacy's Basic Health Checkup have seen a price increase of 7% and 18% respectively, and this has happened between December 22 to August 20. Smaller players such as NetMeds and Healthians, however, seem to be reversing the course. NetMeds had kept its test prices at a discount of almost 60 to 70% compared with incumbents in Mumbai as well as Delhi, while Healthians had kept test prices at a discount of almost 50 to 70% to Metropolis's price in Chennai. Now, what Nuvama has highlighted is the fact that pharmacy price wars are slowly vanishing and MedPlus discounts so far look most attractive. So, given these details, keep an eye out on diagnostic as well as pharmacy stocks with the likes of Metropolis, Thyrocare, Dr. Lal Path Vijaya Diagnostic, Krishna Diagnostic as well as MedPlus.
Thanks, Vamakshi, for taking us through that. But let's keep it with the pharma sector. And Vamakshi, I believe Jefferies has come out with a note on the entire pharma space. So take us through what this brokerage house is keeping on their radar and what they're pointing out for the sector.
Well, yes, Jefferies is highlighting that benign generic pricing due to several factors is hitting the industry simultaneously. Sun Pharma and Intas are among some of the major drivers for lower price erosion. Core portfolio price erosion could remain benign in the near to medium term is what Jefferies is expecting. And in fact, import alerts at plants of Sun Pharma as well as Intas may have played a key role in an improved pricing. As import alerts take time to resolve, pricing will not be a near-term risk is what they have highlighted. But they do see it as a risk beyond 12 to 15 months. Investors should tread cautiously in their opinion as increased supply could deteriorate pricing ahead. So given that, keep an eye out on some of the pharma counters.
Right, Vamakshi, stay with us. You're giving us all the updates today. Let's quickly look at RPSG Group's Investor Day as well. JM Financial has shortlisted all key takeaways here. Vamakshi, talk to us about all of those.
Well, yes, we do have JM Financials who actually held the Investor Day for RPSG Group, and here's what the important takeaways are from that. The group is aiming to double revenue over the next 4 years. Profits are in fact expected to become 2.5 times over the next 4 years. Higher value-added products and tuck-in acquisitions are also expected to aid growth, and in fact, shareholders' value creation is a priority for the group. Now, as far as First Source is concerned, the growth strategy predicted on client mining by cross-sell selling mortgage market has not stabilized, is what they have highlighted, but higher offshoring is a margin lever for this company. So all in all, they've reiterated an FY24 guidance of nearly 2 to 5% growth with 11 to 12% margin as far as First Source is concerned. Now moving on to CESC, there is an ongoing turnaround at the Rajasthan distribution. The cost reduction plan of nearly 300 to 400 odd crores is seen over the next 12 to 8 months for CESC, and in fact the renewable capacity addition is expected for nearly 3 gigawatts over the next 4 to 5 years. PCBL, the margins are expected to improve for this counter through R&D, and in fact they're expecting to see double-digit volume growth as far as this counter is concerned over the next 5 years. Saregama, as far as that is concerned, the company is investing in music content as well as M&A. 20 to 23% growth in flagship music licensing business is expected, with a consolidated margin of nearly 32 to 33% over the near term. As far as Spencer's is concerned, they're targeting positive same-store sales growth in FY24. They're looking at substantially reducing losses in FY25, and they're also trying to increase their share of high-margin products. As far as RPSG Ventures is concerned, 2Yum brand is expected to break even over the next 3 years, and in fact they're expecting to increase 2Yum revenue by almost 3 times. So given all those details, watch out for these counters.
Well, thanks so much, Amakshi. We'll watch out for all of those counters that you just mentioned. But let's also put the spotlight on the steel sector now, which is witnessing the impact of rising raw material prices. What's leading to this soar in prices, and where is demand headed? My colleague Ashesha is joining us to paint a comprehensive picture on this. Ashesha, take it away.
Well, yes, steel stocks are in focus today, and that is because prices of both key raw materials, iron ore and coking coal, have been increasing over the last couple of weeks. In fact, coking coal prices have risen nearly 12% on a month-on-month basis, and now they stand at about $290 per ton. Remember, we rely on imports totally for coking coal, and coking coal is a major raw material. It contributes about 45% of the total raw material cost, and hence any surge in global coking coal prices is a negative for domestic steel mills. Iron ore prices, meanwhile, have also risen. In fact, Chinese mills have increased capacity utilization, and there is some disruption of iron ore inventory, which is leading to the surge in global iron ore prices. Australian fines rose by about 15% on a month-on-month basis, and NMDC too yesterday announced a price hike of about 300 rupees per ton. Now, if you look at the iron ore prices trend over the last few quarters, this quarter it has been on a lower side, but in the last few days we have seen a sudden surge in both iron ore as well as coking coal prices. Now, as far as domestic steel demand and steel price environment is concerned, that continues to remain solid. Imports from China are coming down, which is a positive for domestic steel demand. Domestic steel prices have also risen by about 11% on a month-on-month basis. So on the domestic front, everything looks good for the steel mills. As far as the current spread structure is concerned, contribution stands at about 38% of the HRC price globally. So current HRC prices stands about $550 per ton, and contribution stands at 38% of the global HRC price. Remember, when recently steel prices rose, all of these steel stocks had run up a whole lot, and now with the surge in raw material prices, let's see how these stocks react.
Right, thanks so much for that, Ashesha. But we are completely out of time on this edition of Market Cafe. But before we go, we leave you with the biggest market voices who chip in to give their advice on how to invest in markets at the moment. While Vineet Samre does not see a big correction anytime soon, he also shares his top picks. Also listen in to Pankaj Murarka.
To me, I think these small falls will be bought into, and hence I don't see major correction unless there are some big negative events which turns out. Importantly, one will have to recognize that the stocks have seen vertical movement upwards, and the earnings growth is not going to be vertical movement upward. Despite these order books and strong momentum, you will have quarterly volatility for these companies, which has always been the case in the past, and hence how one deals with that through the next 3-4 years is going to be the important thing.
We had a phenomenal rally in the last 6 months, so probably a correction was much warranted, or probably better late than never. And I think it's a healthy correction for the market, because there are pockets of markets where we've seen stock prices have clearly run ahead of fundamentals, and there's been a fair degree of exuberance or froth, if I may say so, in mid-cap, small-cap space. So I think a correction is much warranted. Aggregate markets are still reasonably priced. Index, if you look at the Nifty index, trading at about 20 times current year earnings, is reasonable in the context of the kind of earnings growth, strong earnings growth that we are witnessing. So I think from here on, much of the gains on the indexes are done, and markets will be more stock specific in that sense.